GTii currently following the implied path per the weekend analysis. Now, before we panic and start selling our houses and refinancing our mortgages and selling our cars and stuff, let's go ahead and slow things down just a little bit. What is up, you guys? This is ARCa coming at you with a GTii technicals, raw price action, and statistical threat analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. But with that said, let's go ahead and dive right into the charts. Okay, so we're looking at GTii on the 4 hour here. Okay, so this is an immediate short-term time frame, 4 hours. Okay, every single candle you're looking at here is a 4 hour read per the chart that we're sitting in. Okay, so before you say, ARCa, you said you found the bottom and stuff, so I want to be able to slow things down a bit, and this is what I mean. Okay, so while you're looking at the 4 hour chart, making several prints of different candles all around these areas and not really giving you a clear insight as to what's happening, if we go to the 5-day chart within this descending channel, which we've been looking at for some time now, you'll see what I mean. Okay, so let's now expand it just a little bit, and now you can see that we're currently still in the process of validating our newly converted resistance, which is this up here, into now support. Okay, so everything is still looking pretty good. We're currently at the low of this wick right here. We did mention that we had a support range right down here as well that I drew for us in order for us to start accumulation before a continuation onto the downside. I actually did mention in the last excuse me, I actually did mention in the last video that we would find some downside first before we can actually continue on to the upside and realize the statistical upside that we acquired, which is actually something that we should probably dive in a little earlier so that new viewers can actually see what I mean by that. Okay, so yeah, let's go ahead and dive right into that statistic. So new viewers, new listeners, you are looking at volatility here, and this is volatility represented by this indicator right over here called BBWP. Volatility is direction neutral. I usually pair it with this indicator, which is proprietary to TradingView software. The link is in the description below, by the way, and it's called stochastic momentum. Now, I've tested this stochastic momentum indicator alone, apart from volatility, and have found that it has a very good success rate. So throughout the entire trading history of GTii, I've taken iteration from every time that the asset has moved to the upside in particular, and out of a total 11 iterations throughout the trading history of GTii, in the 3-day chart in particular, I have seen that it has guessed the upside 10 times out of the 11, which gives us a momentum upside accuracy of 90.90%. Not perfect, but it's very good to consider within the strategy. Now, in particular to volatility versus a momentum profile, we actually have run a backtest on that too. Now, let me give you the conditions for that backtest. So anytime that we have reached a critical volatility loading zone, which I consider to be anything at or above this trend line here that my cursor is over at, the 90%, I have taken note of that iteration's duration, the upside thrust, and also the amount of times that the iteration, or volatility versus momentum profile in this case, have guessed the upside correctly versus incorrectly. Okay, so now that those averages actually came back with some interesting metrics for us to evaluate. So out of a total 11 iterations, we have 7 correctly guessed to the upside, particular to the profile between volatility and momentum. So that gives us an averaged upside accuracy of 68.63% with an averaged upside thrust of a massive 3,200% over the span of 32.25 days. Now, these aren't certainties. These are very much statistic numbers. Okay, so these statistical figures are there for us to be able to evaluate future potentials based on historical past. Similarly to what happens when you're in school and you go to a history class or U.S. history or government. So they teach you what our forefathers did and all the things that have been done in a historical basis, so that we can see how we arrived to where we are and where we could potentially be. Okay, so like the stock market crash, people compare it to the crash of 29. They also are comparing it to the crash in the 70s. So there's a lot of historical figure that we have to per se keep in mind in order for us to apply a future iteration or a future potential, better said. Okay, so now this is the proof of work right down here for you guys. Now, applying the upside metric does have to meet a certain criteria first. Okay, because the signal has not fired off just yet. In order for us to gain or potentially just say, okay, the signal has fired off, now we can apply this metric and see how far it takes us, we need this criteria to be met first. Absolutely. Okay, so in the volatility, this is the volatility component here from BBWP, which is this spectrum line, and the moving average is this lighter pink line. We need both of the volatility component and the moving average both pivoted to, my goodness. Okay, sorry about that, guys. I try to exit these things quick, and then, yeah, we need both of the component and the moving average both pivoted to, beyond the critical loading zone and pivoted towards the downside, and or printing several of these red bars, which actually read 3-day bars. Okay, since we're on the 3-day chart, so every single red bar you see here is a 3-day read. So as long as we are printing the red bars or in the critical zone, or pivoted towards the downside, those are the three conditions that I can give you that can actually allow us to apply that upside metric. Okay, so either we're in the volatility, oh my goodness, either we're in the critical loading zone, or we're in the loading zone printing the red bars, or pivoted towards the downside alongside stochastic momentum pivoted towards the upside. Okay, so this is definitely going to give us that bias for direction. So we absolutely need this to be corrected and pivoted towards the upside, similarly to what happened here. Okay, so we are getting very close to this area, just similarly to what happened here. And take a look at this iteration here. So you see the green bar, it started to load, and then it made a massive move to the upside. So this is the kind of pressure that I'm talking about, and we're approaching that as we speak. It is a 3-day read, so it's going to take some time for it to fortify. So please be very, very patient within this. And I know I'm getting a lot of questions regarding this, if it's a realistic target, if it's a whatever. The fact is that I'm not looking at this being realistic or non-realistic. I am looking at it as a data-backed figure. I didn't put that number there because I wanted to put the number there. The number actually came up because of in spite of the back test. Okay, so this iteration here has a positive 1,670% upside thrust. This one has a 300% thrust. This one has a 1,000% thrust. So they all vary. Look at this one, 39%. But since we have these massive ones, those heavy ones in the 1,000s. Look at this. This is an 18,000% move to the upside. That's ridiculous. Okay, so I'm gonna try to. My goodness, I should just probably press the close button, right? Sorry, guys. Yeah, so that's what I'm talking about within the statistical side. Okay, you guys, let's go ahead and move on and continue on the chart. So this is the daily descending channel that we've been talking about, and it is currently within the demand zone that we were actually looking at from a few days ago, which is also the closing of this gap here that this massive candle closed. If you're a regular listener or a regular viewer, you'll know that I usually keep some of my gaps here in place for future play. Okay, now taking, you know what, I could have done this in the last video too over the weekend, but taking a Fibonacci retracement, an inverse Fibonacci from the day, from the swing low of this particular day, which was December 2nd, I believe that was just Friday, yeah. So taking the swing low to the swing high of that particular day in an inverse manner puts the 1.618 at about 84 cents, which just so happens to be right near our bottom of this loading zone here, or the gap, which is at 85 cents. So there is definitely some confluence right here as well. See, I did it good this time, guys. All right, so this is still looking like it's moving in the projected path that we had implied over the weekend. So this is still very good. Okay, yeah, now this is the other area too. We already touched on this too, but yeah, know that we're still in the process of testing our newly converted resistance into support before continuation onto the upside. Okay, now another edge that I actually didn't talk about is particular to this. Now, what you're looking at here is called the ARC armor. So this indicator is actually named after me, and this is in partnership with Crypstex Trading. And Crypstex has since endorsed me or partnered with me because they believe in my strategy or the way that I trade. So they have given me access to some very, very intricate and detailed indicators here. This one in particular has buy and sell signals based on exponential moving averages being algorithmically placed within the chart in order for it to gauge a wave of direction. And in doing so, it's able to then project whether it's a buy or a buy or a sell. Now, the reason why I didn't mention in this one in the last video in particular is because I'm continuing to forward test these indicators, which can be available to you. If you send me a DM, I can show you how to acquire them. But you see down here, we have a long signal. It actually went all the way up. It has a short signal, went down. We didn't catch a long signal here, which is terrible, but we did get a long signal here for a potential 50% trade. And the most important iteration, what I'm talking about here, is this one here, that we did print a short signal here, and we have since continued the capitulation event towards the bottom. And even in this rise, we did not print a long signal. Okay, so it is still honoring the short signal, and the enhanced MACD is also suggesting the downside here as well. Now, if you can compare the price action versus the ARC armor, take a look at this. So the cursor is what I want you to look at. So the bear signal flashed here for the enhanced MACD when armor actually confirmed it right down here. So combining these types of indicators together from the ARC-Series indicators give a certain edge for us to see or forecast the future. So I use this in line with other metrics for me to be able to confirm or validate a potential downside, right, to factor into the results. Now let's move on to the last part of the chart. So this is where we were talking about yesterday, potentially finding another downside before upside continuation. So it has since happened, and yesterday we also mentioned that Thursday or Friday, we also mentioned that we had 4 primary drives of hidden bullish divergence, which is usually what happens when price action is making a higher low, and the RSI signal is making a lower low. So hence this wedge here, this broadening wedge here, is literally just what's happening right now. So even with this downside that we got, this is all that it went down. So upon the closure of this candle here, which is tomorrow, we can potentially make another spike just like this spike, thus confirming another 4 drives of hidden bullish divergence, just adding to our upside thesis for the coming weeks and potentially a month or two, right? Since it's a 3-day chart that we're looking for the statistical upside. So yeah, you guys, I just wanted to be able to give you an insight and an update as to what's happening within the price action of GTii. We can actually just look a little deeper just in case you're still a little curious. The RSI is still suggesting some things for us to evaluate. Okay, so for the new viewers, new listeners, these are the 4 zones of the RSI that I would like you to focus on. So these are the 4 zones right over here, just blown up for you so that you can tag along as I talk. Okay, so yeah, you're looking at the immediate short-term time frame RSI here. 30-minute purple line represents the RSI signal. Pink line represents a 14-day moving average, which is fixed to this indicator in particular in any time frame you so desire to be in. Okay, so you're looking at a suggestion of slightly to the downside with maybe a neutral bias. The thing is that when we're in the shallow areas of either zone, you are likely to be gravitated into the opposing zone. In this case, you're looking at the bear strength percentile, potentially immediate short-term time frame conversion into the bear weakness percentile in this case. So now let's look at the buy hourly. The buy hourly is also suggesting a neutral direction. Now it is sitting very, very, very much in the grips of the bear strength percentile with a neutral bias in direction. The moving average is giving us a little bit of a hint of a not so aggressive downside, but a potential continuation to the downside, which is very much in accordance of things starting to slow down as we're testing this newly converted resistance into support and our demand zone. So this is likely going to present prevent some sideways trading. But let's go ahead and continue on with the time frame. 6-hour RSI is suggesting also a neutral bias in direction with a slight downside pivot, very much in accordance with the buy hourly and the daily finally. So this is a daily RSI still suggesting now entering the oversold percentile, moving average giving us a hint to a continuation onto the downside, however not so aggressive like this pivot here. Okay, so I still expect some further small pullback, from the current position. I know that it's retraced or it's capitulated already. Please don't don't take that wrong. What I'm saying here is that there is still a potential downside, but very, very slight. It doesn't look like it's severe. And yeah, so everything is looking like the plan. Please, if you have any questions or concerns, don't hesitate to reach out to me on Twitter, Discord. I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community. But with that said, I will sign off here. So yeah, I wish you a good night, and I will catch you at the bell mañana. Adios.